So, good afternoon, good morning, good evening, traders. I hope everyone is well. Had a bit of drama yesterday with one of my ISPs. Didn't seem to want to play nice. So, we're testing it out again here. Everything appears to be working as advertised. It's Friday afternoon here in Southeast Asia, the wee hours of the morning, Friday at Central Standard Time, and around 9 o'clock, 8:30 in the morning on with our London friends. This is the time that I generally try to look at the market. It's about 08:37 in London, and coming on 4:35 Asia. So the Asia trading session is winding down, and the London boys are taking charge, and they generally raise all kind of cane when they do that. Sometimes there are opportunities. Obviously, this is another one of those. If you'd have just jumped on Globex at the open and sat on it, you'd have been not looking back for 30 or 40 points. It's 50 points over settlement. Settlement today is 12,928. About there. Just obviously when the market started out, sometimes they settle quite off that, but this settlement was right on the close. The volume is a very normal profile, bell shape, value area. Outlier above and below. If you're not familiar with the stream, once again, this is the NQ. This is the NQ 5-minute. This is a 20-minute range chart, and this is the ES. We have no indicators apart from VWAP with 1, 2, and 3 sigma above and below, or standard deviations, cumulative delta, and relative volume. This platform is the Tradovate platform. In this case, it is the TopStep trader because we're on the step 2 of a $50,000 TopStep combine. And the dome is the Jigsaw dome. Links to TopStep, Tradovate, and Jigsaw are just below the video, as is a real informative link to CME for contract notational size, tick size, rotation, contract rollover, etc. So there's a lot of good information on that site that you want to be definitely aware of. Looks like the craziness in the capital in America is going to kind of quiet down finally, I would hope. And maybe the world can come back to normal and get a bit of work done after all that craziness the last couple of days. I would suppose that after the 20th, which is the inauguration of President-elect Joe Biden and Ms. Harris, that things will start to smooth out. I would hope. If not, well, we've got bigger problems to worry about then over there. So, let's see where we are here. The daily on the NQ is pretty obvious. This was Monday's big sell-off, and a little inside day on Tuesday. Wednesday hammered it again. Thursday was an up day, and now we're going at all-time highs and just poking our nose at 13,000. So, be pretty amazing if we don't get up there in the next few hours. either the London people will take it up there, but if they do, then very, very seldom does the regular trading hours traders do the regular trading hours traders let a high or low put in during Globex stand. Also, there's another statistic which is about 97% of the time, either the Globex high or the Globex low are taken out by the regular trading hours. Now, within itself, that's not necessarily an edge, but the interesting part is that only 20 some percent of the time do both high and low be breached by the overnight. So that could be an edge in the sense that if, let's say, we've traded above here, we've put in a new high, we've taken out the overnight trading high, or the Globex high, we pull back down towards the bottom. If you're looking for a mean reversion trade back to the POC or VWAP, only 23% of the time will it continue to take out the low. So if you leaned on the low, you'd have a fairly good edge. That's an example of a statistic being used as an edge. Of course, past results are in no way indicative of future performance, or however that goes. Past performance is in no way indicative of future results. Trading's not for everybody. You can lose your ass. You can lose more money than you have invested in futures trading because of the leverage. The disclaimer is also below the video, and I'm sure everybody knows that. But there must be a reason why it's continually repeated by people in the know. So I assume that there are the occasional lawsuit tests of somebody, coming in and losing their account and are blowing up, and then saying, "Well, so and so told me to do that on YouTube." So I guess that's why. All right, so it looks to me like everything's pretty much working here. We're getting no flags, no errors. Stream condition is good. I guess everything's okay. The technical elves are smiling on us today, I guess. Now, as far as trading in this period, something's wrong. Wow. The movement is so small here that it's barely perceptible. Just have to watch the numbers change in order to be able to see this move at all. And the way this is set now, I've adjusted this for every grid size to be 10 points. This is the NQ. And you'll see that this is the value area in amber, gold, whatever you want to call it, and green is the outlier. Obviously reflected here as well, with the light gray being the value area, dark gray being the outlier. POC is red. I try to keep the colors as consistent as I can, just because it makes it easy for me. Red, and then POC or VWAP is purple, as it is over here. And so there we have it. Looks to me like it's quite choppy here, obviously, and not a market that I would necessarily want to be part of. That's just a chop zone. understandably. And Fridays are dicey days. I will not be participating during the regular trading hours open. Friday evening, we have other plans. So I wanted to be sure that the stream was up. I will monitor it when I go offline here. Be sure that everything was working. I put some background music against the stream starting soon page, and I want to be sure that that's playing properly. And it's it was reported to me and purchased it. I got it as on copyright, but Google's quite comprehensive of flagging anything that's copywritten. Uh, doesn't affect the channel or the playing, but monetization is prohibited if you have a copywritten video, music, or anything that's copywritten on your stream. So I don't really care about that, but I want to be sure just because I don't want to get sideways in any way, shape, or form. That's not the purpose. The purpose of this channel is to create a visual, virtual trading journal. And the audio over is I try to talk through my thinking during the trades and not when I'm in remember there are three positions, long, short, or flat. When I'm in the flat position, I try to do as much verbalization of my thoughts as I can so that when I review, go back and look at these, I can hear what my thinking was and apply the non-emotional thinking of when I'm viewing the video of not being in the market. And it's amazing how sometimes you can go, what was I thinking? So that is the purpose here, and hopefully by doing so, I will be able to help others who come watch and take something away of value here. That's my goal. My goal or revenue model are to be an internet star and all that stuff. That's not the point. I want to be continue to be a successful, profitable, consistent, profitable trader and share some of that knowledge with those coming along behind or sideways, or build a community here of like-minded traders and people who want to communicate and trade and have a place to hang out that's free. And that's the idea. So let's see here what we're going to do to POC here. I don't know. That's a classic example of don't diddle in the middle. I think that was Hull that coined that phrase, but that's something you definitely don't want to try to stay away from. Look how this is just thrashed back and forth over that POC. Undoubtedly, some folks lost. Now, sellers are in control here. You see, we've basically been in a downtrend here. So sellers have basically been in control. But how can sellers be consistent and have the market be going sideways to up? You see, that's something you always have to question. And wow, look at 184 at 20 at 980. Oof, that's some size, and it's staying there. That's one hell of a position. Somebody's taking some ground there. Undoubtedly, we'll trade up and test that at 980. So Let's just. They pulled it out of the way. They filled their order and let her fall. I would say spoofing, but it's illegal, so shouldn't accuse someone of doing something illegal. But it's pretty suspicious when there's 184 size sitting on the price for quite a long while, and then not any real trades through it, and it lifts and away they go down. This is not even really good scalping here, in my view. Be nice to catch a quick trade today, and then go into the weekend with a little green on. We're green on the week, but minimal amount of money, 235. I believe it was 2 days of trading, so we're up maybe 500, but nothing to speak of. But quite volatile times, and a number of people got sideways pretty bad, I think. My next, as soon as I am confident that all things are running smoothly here, my next point of focus is going to be on a microphone and proper audio. Nice, clear audio. Trying to use this LG Pro X with the Blue Voice boom mic, but that's just not seeming to be proper. I think I've got the setup all as recommended, but it just doesn't put out the volume here. We're getting down to view app. Heading for view app anyway. And we're breaking down on the ES and the NQ. If they can, the NQ can drop through here, get through all of this traffic and this volume, we could see some downside. The ES is looking heavy, but light traffic, very light traffic, and look at the book, it's all got big holes in it every place. I'd say this is a Friday afternoon to enjoy with the outdoors. I'm going to step away for a moment. I'll be right back. And back. So the Chop Fest continues. Must always keep at the forefront of our minds as traders that the object, our real, absolutely real job, almost only job, is to manage our risk and our account size, and thereby our account, and be able to trade tomorrow. It doesn't matter, what indicators you have, what stuff you believe. If you blow up, it's all over. So the key to an edge is to have enough occurrences for that edge to provide you the profitability and the consistent profitability. That's it. The rest of it is all smoke and mirrors, pretty much. So, patience is one of those things that is absolutely necessary. And remain calm, somewhat detached, focused. Those are the personality and psychology traits that you've got to learn to manage. The two most, you have two capitals that you have to conserve and grow. One is mental capital or psychological capital, and the other is your account. The account will take care of itself if your psychological capital remains strong and intact and you manage your risk and have the proper positive attitude. It's the old saying, watch the nickels and dimes and the dollars take care of themselves. It's the same idea. And psychological or emotional capital is more than likely much bigger, has a much bigger impact and effect on most traders. One of the worst things is to take a big, and that's a problem with Friday afternoons or Fridays. Take a big hit, lose some money, and then you got to sit and stew on that all weekend. That's eating into your emotional capital. Some of these guys that I watch that they go short or they go long and the market's selling off, and they imagine is they pick the bottom and they add another one, and then it keeps going south, and they keep adding, and they rationalize that they're adding to their trade. They're not doubling down when that's all they're doing is doubling down, and cost averaging down, which is, I think, pretty much accepted by anybody that knows how to trade, or any professional trader, as a bad, absolute, the top no-no to do. And then they find themselves down $8,000 or $10,000, and finally the market is either going to close out or they finally take that loss, and now they got to sit and think about that. Imagine what that's done to your emotional capital. I mean, the money you can make back relatively quickly, but that's one hell of a hit to your emotional capital. Lots of good books out there, lots of people that know a lot more about it than I am. Certainly not a psychologist or psychiatrist or any one of those disciplines. So I was hoping to see some action out of London here, but we're 9:03 now London time, and looks to me that those boys are not. They're either not. Either they do not have any particular axe to grind or opening orders, or they're just asleep at the wheel and the coffee hasn't kicked in. Maybe we'll see. So our cumulative delta is obviously short here. Sellers in command. Can also tell that over here. That's negative 65 on the volume or cumulative difference between those two. This is these are sellers reaching across and hitting the bid, and these are buyers lifting the offer. That's the same thing that you see here. Every time you see red, that's a seller coming from the offer and hitting the bid. When you see a green, that's a buyer lifting the offer. And this is the inside inside book bids, inside offers or sales, whatever you want to call it. And this is adding and stacking the snapshot over here. You can see what's being added and stacked. And the way these inside numbers work is that that will remain until the market comes through that number again. So this too, or let's pick one here. You see that 6 just dropped down to a 1. Last time they traded through that, they traded 6 lots against it, and now they've traded 1. There's 2. See what this 2 does. See, they traded 1 against it. And that's how that inside snapshot works. Or I don't know what they call it. The snapshot, I think, is what that column is called. This is obviously volume profile, and this is the price level. This is the numbers, the contracts that have traded at each volume. And I can set this book to any number that I want, but when you have it at a depth of 10, you get the total book depth, which I find an interesting number to see. And yeah, maybe it's interesting to see how many orders are sitting up here. Like if you want to think about the auction vista, which is the version of a heat map that Jigsaw uses, similar to the book map idea. You can see if those things are how they're sitting up there and get a feeling for what's been there and whatnot. But I find it short term that I trade normally that this is kind of better for me to see that we're averaging 35, 36, 38 against 24. So there's we're heavy on the sell side or the offer side, right? And that means we'll probably pick this 13 up. Traded through 1 through it. They're adding to it, adding to it. It's not pulling out of the way. It's trading. So 71.25 is a price, right? That's a real price, and those are real offers. That's not a spoof. That's trading. Now they traded it out. Traded 36 contracts here at that price. Lifted the offer 36 times. 36 contracts, I should say, sorry. And when we trade through that again, that'll now go away to whatever number trades there this time. And they haven't gotten up there yet. Oh, there we go, 20. So they lifted the offer 20 more times. So they've hit that. They've hit that 71, 25, 56 contracts in the last 2 trips back and forth on this little hoop-de-doo they're doing, this chop fest they're having over there. That is the market auction in action. The market auction in action. And you have similar numbers up here on the inside, but it's just easier for me to, I guess, because I'm used to looking over at the dome or depth of market, as it's referred to. Well, kind of disappointing. I was hoping those boys would be have some business to take care of, and there'd be some a little bit of volatility and some volume, and we could have tried to pick off a couple of positions here and participated a little bit, but certainly not going to click and bang just to do it. I see no, I see real no opportunity that interests me here. That's for sure. Kind of strange too because the ES is just basically a downtrend, and they've broken through once, and now we'll see what happens there at Sigma 1. They get down. Uh, I suppose if they got below VWAP here, we might have something. I can safely say I don't think I've ever seen this before. There we go. Just a stuck number, I guess. I was going to make a hypothesis that because it was that the VWAP calculation was actually between 75 and 0.75 and 0.50, like say 60, so it was splitting the difference and lighting them both up. But maybe that's the case, maybe that's not. Next time if I happen to think about it when I'm talking with Peter Davies, I'll ask him if that how that works or what how they calculate their VWAP. I'm supposing that since this is just based on straight data numbers, that's probably a similar idea. They'd have to make a call one way or the other because the average volume weighted price is not going to be stuck on it, at a specific fix. It's going to be somewhere between 75 and $1, in other words. So, well, that is no place I'm going to trade. Just above VWAP, right on the POC, almost a perfect distribution. Little skew to the downside here. See the difference between the darker gray area here and the darker gray area down here below. And they got down into value and were rejected back out of it again. So now they're holding pretty much above value, above regular trading hours high, and obviously above settlement. So inventory is so far just about 100% long. I got this little dribble of stuff right over here. Well, don't know if we're going to see any opportunities here. So hopefully this weekend, now that the dust is cleared from the holiday and the new year and quarter ending and all that stuff, I'll be able to work on the video for the setup of the Tradovate platform. How the brackets, what my basic strategies are for the brackets and for my trading, and then I have another video that I'm gonna put together, which will be or recording that I will put together that will be a cover some fundamental truths about trading that I have come to understand and believe to be absolutely true. The secret sauce or the holy grail, if you will. And something that I find so strange that very seldom are these truths actually talked about or taught on the internet by all these gurus and people that are going to sell you something and that's going to make you millions. So I want to give that a lot of thought and put it out there. Hopefully that will help. Certainly, those discovering and learning these principles really helped me achieve not only consistent profitability, more or less, but a more calm and measured understanding of the market and state of trading. So those things are important, I think. And again, the purpose of this stream is to try to build a community of like-minded people and have everybody learn from one another. Myself kind of being the pivot point because it's my charts that are up and my trading that's being seen and my voiceover that's doing the narrative. But certainly hope for participation in the chat and whatever. Thinking about that, I'm not sure whether the chat on the stream here will be sufficient or have a Discord or whatever up that can be active all the time. Well, it doesn't look to me like the London people are going to make the move that makes the difference as far as adding volume. And wow, 280. Look at that, 283 sitting at 67 or 76. So now let's watch if that they get up there, if that actually holds, trades through, or what they do with that. That was the typical spoof, right? Is that somebody would lay in a big order like that, and then when basically trying to bring people up to that liquidity, and then when you got there, they would just pull it out of the way, and what they're really doing is working the other side of the book. Now we'll see what happens if they can trade up to that 76 area. Trying to. One thing that you have to remember, or that's important to remember, I believe, about spoofing and these kinds of orders, flashing those orders and stuff like that. Watch that 182. 282. In order to put that order in the book, you've got to have an account big enough to sell 282 NASDAQ contracts. Just at the basic day rate or daytime margin, that's $141,000 account size. Look at that, pulling off and loading, pulling off and loading. But interestingly, it's just flashing, and the snapshot for stacking and pulling isn't showing anything. So that's interesting. So in other words, that's not mom and pop that are doing that. Now it dropped down, and then they're fussing all around with it there at the 75. But they're not trading there. There's all this play going on to get somebody's attention. The trade's clear down here. The trade's a full point away. But that's got to be fairly deep pockets up there. Institutional, who knows? But that's definitely somebody with a sizable account to be able to throw an order on, because you can't put that order up there unless your account has that capability. That's not to say the guy's going to actually trade that 282 contracts through, but you can't flash that unless you've got that size of account. I can't do that with for example, with this account. I don't have that margin. So that's something that's important to remember when you start seeing big things like that, and the games that get played on the book and in the and in the markets, especially when these markets are light, light volume and light volatility like now. But we are definitely at the buzz, the buzz saw going here. They're eating people alive. I hope no one in the sound of my voice is getting chopped up. And there are traders, I'm sure, that can jump in there and just scalp that back and forth on a tick or chart or something like that, and that's great. There's nothing wrong with that if that's your style. That 282 just disappeared. fetching that much data. That's interesting. I didn't realize that they limited their data to 10 on the book. That's not a good thing. Well, move me down. Pretty amazing. Interesting. Huh. Okay. I've had a number of other platforms and data feeds in my time. So I've very definitely know that that function works, and you can have many, whatever the depth of the book really is, you can have there. But it's what's being pushed by the data provider at this point. Oh, there we go. Now they woke up. Damn it! And I was doing and I was doing an email. I didn't even see that. Well, that sucks. That's always the case. You sit and watch and watch and watch and watch, and the minute you go to the bathroom, get a glass of water, whatever it is, have a or whatever you're supposed to say, bio break, get a glass of water, whatever, then the damn thing falls out of bed. Isn't that something? Just exactly what I've been sitting here all this time looking for. And yeah, shucks. Well, there you go. There you have it. That would have been quite a nice little, quite a nice move. 169 now. In there, it's 57. Pulls right off. Playing right on this area here. I like bar charts better than candlesticks, but I've determined that much easier to see on the replay for those who are doing that, myself included. Well, son of a gun. Timing is everything. Coming back up to volume there. Will they come back up and test the are they going to test this again? Or are they going to just trade it out down here? I'm thinking trade it out down here. Maybe not. Could have been the move there at the value area low test. I have my hotkeys set up here. You'll notice that I'm changing this contract or trade size volume there. Normally it was a 2. I keep it at a 1. I was thinking about this. Normally I would have a short just at the bottom of VWAP there, expecting a bounce. But in this light market, I'm not comfortable with that. Well, it's just so damn funny. Sit here for an hour and change, watching them chop that thing back and forth, and then step away to check on my daughter's computer, which we had to reset through the course of the night. And that's when the move happens. That's when they move it down. Now, you see, when it's normally, I would have an order, normal market conditions, I would have an order resting just under the VWAP for a bounce down. But when it's such a slow grind up to VWAP and relatively light book, spotty volume, well, it's picked up now since a little bit, but spotty volume, that's not a very confident position. They could easily just grind right through that and keep going up without the normal bounce. That's more of a regular trading hours kind of a trade or setup, I should say. What are we going to do? The reason that I like to trade places like that VWAP test, reversion to mean, and not from the center out, for example, are what is this crap? You know where you're wrong. You know, if you've got a now it's performing properly as it should. If you've got your order sitting right under VWAP here, and your premise is that you're going to get this movement that's happening right here now off that VWAP test, if it goes above there, you're wrong. Case closed, and you're out the door, right? So that's all a part of managing the risk and all those other platitudes about keep your losers short and your winners long and all that kind of stuff. But it's the truth. Uh, there are guys that I don't can't quote anybody's name or any specific data, but there are guys who supposedly are consistently profitable with win rates, in the 30s, 30%, because they get 4 or 5 times win to their loss. They might lose, they might risk or lose, let's say 5 ticks or a point, and they might get 20 points. So that's that's how that works. That's how the math works. Ah, darn it! I wish I'd have. Yeah, no, I don't wish I'd have taken that trade because had it blown through there, then I'd be spending that emotional capital that I was talking about earlier. So there's the bounce from VWAP test. There's the Sigma 1. Sigma, again, sigma is the statistical term for standard deviation. So uh, these are standard deviation 1, 2, and 3 from VWAP, below and above. That's it. It's not any kind of magical math. It's just real simple, and that's a indicator built in that you get from the Tradovate platform and the what they call it. It's from the community, and these are the Tiki tools. This happens to be Tiki is a guy in Hawaii that built some of these indicators. That's the that this is the Tiki relative volume. I like this histogram. It reminds me of the old uh, one that I've used on Jigsaw for years, called that Peter calls the sheep index. Similar, easy for me to see, much better than a line bar or line graph. And this is his VWAP, and you can just turn off or on the standard deviation bands above and below. So that's it for me. That I find that to be very handy, and the free part of the community. Here we go again. Now we're going to test. The first test is best. You see, the first test is best. So let's imagine that this was a normal trade setup, and we're going to put a short right there, and we're going to use the bracket. All right, that's what the bracket would look like that we have built in, and that's a pretty big one. So you'd be short at 62. That's 8 points. Stop, and your profit target's down at 42. So that's 20. That's this bracket right here, which is 8 and 20s, right? And that bracket looks like that. Well, looks like something. I don't know where I went. I don't know where that is. Here we go. So I do all of my brackets in ticks. You can do price or currency. This is a take profit and stop loss. What happens here is we got to take profit at 80 ticks. The stop loss at 32, which is 8 points. At 8 ticks, it goes break even offset of 2. So that's how that would work. Another one here is the one I normally would use. Now this one here, when we reach 8 points plus a tick, the stop automatically comes to 8 points, so that locks in an 8-point profit. And then we can still run to 80 or 20. So that's a simple bracket. This program is real simple, real easy to straightforward to set stuff up. Now you see, now it's toying with people. So you're short. You had your short sitting here. This first test was the one, right? Now you tried it. Ooh, that worked great. So you're sitting here now. What's going to happen? Well, you get teased. It goes to get little heat, comes down here, a couple of ticks, doesn't give you any profit, or you probably don't take your profit because you've got a target that's bigger than that, I hope. And now what are you doing? Now you're taking heat, and this thing has got all the potential. If it's accepted above that, it's got all the potential of going up here to the POC and perhaps across to the value area high. So it's a bad place to be. That's why I was saying on this first test before it happened that if you were short there, if it crosses over here, okay, maybe not a tick or two, but say 5 ticks, you're wrong. And I believe you're wrong, and you should be out of that because the premise of the trade has been violated. Now, unfortunately, this is all rear view binoculars. I did talk about this as it was getting ready to happen, but this, I'm not. This is nothing that I've traded, so it's not any. This is basically like all the BS on the internet, but it is commentary and it's my thinking. So I will continue to do this and think out loud for my own benefit. I guess my advice is if you don't like hearing what I'm saying, you're familiar with the mute button probably. And let's say you're short here at 62.75, say. Your 8 points would be up there right under the POC. So in this market, I would be using a different bracket with closer stops myself. Be right back. Now that's a revolting development. Why would they push that? I wonder what the heck the timing would be on that. Anyway, this is how they push out the roll. They show you that your volume is low and what your open interest is. These happen to be all currencies, looks to me. I'll change them later. So your second attempt on that VWAP test is a loser. Had I been in that trade, the first test was the best. Funny how those old platitudes or sayings are really based on truth. Absolutely. Absolutely. going to be interesting to see how the market adapts to and reacts to the change of government in the states. I am about 99% sure that Biden will not be a Twitter user. So that's going to be good because who the hell knew when some bomb was going to come, Twitter bomb was going to get dropped and then everything would break loose. I'm sort of hopeful that there's going to be a little more normalcy around things business wise and dialogue wise. I think the market will like that. I guess that's probably why it's gone to all-time highs consistently since the election. I guess I don't know that, but that's my supposition. Not any political comment at all from on my part, but just an observation and what I hope. I hope that there's some calming force in America, actually, and in the market that display at the Congress building was pretty pathetic. So, London is not really engaging too much now. Coming on to 10 o'clock in London. 105. What noise is going on? Oh, there we go. UK stocks. That was the fifth day running on. Friday after data showed Britain job market strengthening for the first time in 3 months. Oh, good for them. Could be kind of a perfect storm for the market, and business, the economies of global economy, actually, in general. But in America, in particular, if the change of government and a little more measured, professional kind of what we used to be used to as a government, and then with the vaccine kicking in and a more normal situation coming to COVID, I would think there'd be a lot. I would imagine there's a huge amount of pent up uh, money on the sideline and people just dying to get out and go to dinner and spend some dough, hit the mall, go to the bar, whatever it is, buy a new car, take a trip. I would imagine that there's going to be quite a pop to the upside economically. Just like there looks as to be a pop to the upside on this Nasdaq right now. I like to see an area. I like to see a volume profile where I can monitor my cumulative deltas, and where you have a volume area and then a low volume area or node or whatever the correct terminology is. But anyway, and then another higher volume area, and you pretty much know you're going to trade from one to the other. This big belly thing here with a bunch of spikes sticking out of it is uh, harder for me to get my head around trading. And now they could be trying to run a new high. London not liking the Asian boys to get one up on them. The Asian traders, I should say, certainly not all boys or men in either location. I wonder what the demographics of traders is, especially now that it's moved away from that all male environment of the pits. I mean, there were some ladies there that were traders, but I think the vast majority were guys. I believe. I bet you there's a big influx of lady traders now that we've been now that we're electronic and on the screens. Be interesting demographic. I wonder if anybody has that. Now, is this a pullback that we can buy and look for that high? I will not do that because that equates to buying at the POC and trying to trade out. So that's not something I like to do or that I find to be consistently successful. The POC is the obviously point of control or the highest amount of trading and volume. And so that's where price is most accepted and where the auction has traded the most contracts, meaning buying and selling back and forth, up and down, chopping. Bad place. That's a bad place to be. Trading from the inside out, I've tried it a number of times. I used to get trapped doing that when I was trading the market profile a lot. It's easier to see with a volume profile like this. And of course, the red line marks it. But by and large, mean reversion trading is more successful than trying to trade, figure it's going to extend or continue. Now, I think there is a statistic on that. That is that like 22 or 3% of the days, trading days in any one year are trending, and the rest are mean reverting. So that's a pretty significant edge in reverse, right? You've got 23% chance that it's going to continue in a trend and a 63% chance that it will not. So best to have the odd in your favor, I guess. And this is especially dangerous in my opinion because it's right here in the middle of all that. And it could turn around and make a liar out of me in a heartbeat and just go hit that 1300 right on the button. 13,000 right on the button. You never know. Buyers aren't real strong. Buyers are definitely were on the move there, but could also be profit taking off of this sell off, which is essentially what's been going on here. The cumulative delta is aggressive buying and selling. So that's what you're seeing go on over here. Every time one of these sellers hits the bid and it goes red, this is the aggressive selling. Aggressive buying is when one of the buyers lifts the offer, like that green flat right there. Someone from here stepped up and took this offer. They lifted that offer, and that's the positive side. So that's how this moves up and down, and this is cumulative. So instead of showing these at all these different prices, if these were just adding together back and forth and back and forth and back and forth, that's what you'd get here. Cumulative delta. The difference, delta being the difference between aggressive buying and aggressive selling. So I hope everybody had a holiday that was pleasant and safe. New Year, Christmas, or whatever holiday you celebrate. We are here in Malaysia, Kuala Lumpur, which is a Muslim country, of course, but there is basically three large populations here. It's a great place to live, besides perfect weather and a number of other things and real nice people. It's a great place to live in the in the fact that there's a huge population of Chinese Malay people. There are the local Malays, and then there is a large population of Indians from India, mostly Hindu. So everybody gets along great. Everybody celebrates everybody else's holidays. I think this country's got more public holidays than any other country in the world. I think there's like 40 or 50 or something like that. So, Ramadan, Diwali, Deepavali, Christmas, all of that goes on. And everybody celebrates it and takes time off, and everybody gets along quite well. So it's a really is a pretty nice country to live in. I've been here for about 10 years. I do go back and forth to Houston, but since the pandemic, I got trapped over there for several months, and I got back here end of June, and I'm sticking here until things change significantly so that I can travel back and forth on my normal schedule as I used to do. So we had a nice peaceful holiday. The COVID situation here is taken very seriously by everyone. We all wear masks. We all check in with a cell phone app when we go into stores, even into a taxi or Grab. Grab is the same as Uber over here. The total people infected since the epidemic began is 125 or some change thousand people. 98 or 9% have recovered. There's a total of 508 deaths since the virus began. And they've just had a big spike, actually. One of the highest days previously was like 2,000 people. And lately it's been up to that again. So I'm kind of suspicious that we might have a more stringent lockdown. That's why we're going to go out for dinner tonight, and I will not be around for the regular trading hours open. But Asia's done quite well with the virus and with people just accepting and understanding understanding, accepting their responsibility for their part of the bigger whole, uh, wearing their mask, taking care of social distancing, all that stuff, and as a result, it's been very little negative impact. I heard some horrible statistic 2 days ago. One American is dying of COVID every 53 seconds, 24 hours a day. That, you know, that's staggering. 400. They estimate that by the end of this month there will be over 400,000 Americans died from the virus. Just boggles my mind that people still refuse to take it seriously and, refuse to help their fellow citizens. I mean, if you're upset that your mask, some of these people squawking about wearing a mask is against their liberty or some crap. No, it's not. It's being polite and helping protect your fellow citizens. It's just astounding to me. But, that's just me, and everybody has their own opinion. It just baffles me, though. Just baffles me. Well, they're just trying. I don't trade breakouts as a general rule. Very, very, very seldom, and usually more of a mistake. Unless it's right around regular trading hours open, I oftentimes will do the opening swing trade, which is essentially kind of a breakout, I guess. But like now, I would be extremely hesitant to try a long here. Again, going away from mean reversion. Unless it became quite obvious that somebody, was really decided that they were going to try to take that $13,000 high and show everybody how big of traders they were, then it might be worth trying giving that a try. But with this volume and this trading as it stands now, I'm not thinking that I will probably be trading before I have to sign off here. It's 1800 local, 1807 local. So I'll be out of here in a few minutes. Kind of rounding off there. And if you if you look, it's just still pretty much chopping around. I guess one would have to say that with the hindsight binoculars, the trade of the day was the right out of the opening gate. Throw on along and sit back. Maybe one of these days I'll try that. I'm up usually about that time still as well. Again, or however you want to say it. That's 6 in the morning, 5 in the morning, 4 in the other way around. 7 in the morning now with daylight saving. Throw on maybe a micro or something and just then go back to bed. See what happens because several days in a row, had someone done that, it would have been a basically no heat winter. I've never traded that time frame particularly, but just look at this. You just here's your open, boom, 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 boom. When the opening swing, which is high, the low, you throw a long on here somewhere, micro or something, and then just let it go. Okay, 27. You haven't even come close to taking any heat. And up about 70 points, right? So who knows? That might be a something to explore one of these days with micros, of course, which can't hurt you. Okay, so hanging right around that settlement. And then up we go. No, what am I talking about? 980 settlements, 928. Settlements clear down here. I was thinking out loud there about the POC, hanging right around that and the Sigma 1. Doggone. I am going to conclude the stream here at quarter past the hour. Wish everyone good trading. Watch your risk. Trade to trade another day. Averaging down is a bad idea. uh, and it's a real gray area about can campaigning around a position, or I realize that. But there's a saying that is the market can remain irrational much longer than you can remain liquid. And that is so true. And that's essentially what's happening when people are averaging down. They're saying, no, this is going to go up. No, this is the bottom. No, it's going to be, there's going to be a bounce. It never gets down this low. It doesn't bounce. And then they keep adding, keep adding. Well, the market can go, as as we discovered with crude, the market can go below zero if it feels like it. So it can remain irrational much longer than the average trader can remain liquid. With that, I will wish you the best of luck, and I will terminate the stream at this point and talk to everyone on Monday. Have a great weekend. Trade safe. Get your money, and remember your emotional capital is, if not as important, if not more so. Don't give anything back. Fridays are historic for that. So